Think about your morning. You woke up. You might have ordered a coffee through an app. Perhaps you booked a ride to work. Later, you might order lunch. You could even split a bill with a friend. All of this happens with a few taps on your phone. You probably didn't think much about the payment. It just worked. This seamless experience is becoming the norm. We expect things to be easy. We want our digital lives to be smooth. This is where the world of finance is changing, fast. Welcome to Finance Made Simple. Let's dive into this. Banking is no longer just a place you go. It's something you do. It's happening right inside your favorite apps. The payment part simply fades into the background. It becomes part of the service you are using. This is the revolution we are living through. So, what is this embedded finance we're talking about? Simply put, it's the integration of financial services into non-financial businesses' websites or mobile apps. Think of it like this. The bank comes to you instead of you going to the bank. It's about placing banking-like services directly within the customer journeys of companies that aren't traditionally banks. This means you can access loans, insurance, payment processing, or even investment options without ever leaving the app or platform you are already using. It's banking, but not as you know it. Let's look at some practical examples. When you use a ride-hailing app like Uber or Lyft, you don't get redirected to a bank's website to pay for your ride. The payment is embedded directly into the app experience. You add your card once, and then it's just a tap to pay. Another example is e-commerce. Many online stores now offer buy now, pay later options at checkout. This is a form of embedded lending. The key idea is context. The beauty of embedded finance is that it often works so smoothly you might not even notice it. It's designed to be part of the natural flow. Consider the e-commerce giant Amazon. When you shop on Amazon, the payment process is incredibly streamlined. Your card details are saved. One-click ordering is a reality. They even offer their own credit cards and BNPL options. This isn't just good customer service. It's a prime example of embedded finance, making the shopping experience faster and more convenient, encouraging more sales. Ride-hailing services are another classic example. Think about it. You finish your ride. You hop out of the car. The payment happens automatically in the background. You receive a digital receipt. There's no fumbling for cash, no waiting for a card machine. The financial transaction is completely integrated into the service. This seamlessness is a core reason for the success of these platforms. They removed the payment friction, making the entire experience smoother and more appealing to millions of users worldwide. It's about providing value beyond just connecting buyers and sellers. Behind the curtain of these smooth embedded finance experiences, there's a powerful enabler banking as a service, or BaaS. What is BaaS? It's a model where licensed banks integrate their digital banking services directly into the products of other non-bank businesses. Essentially, banks allow other companies like Fintechs or even large retailers to use their regulated infrastructure and offer banking products under their own brand. The bank provides the plumbing, and the other company builds the customer-facing experience. Think of it like this. A bank has a license to operate. It has the complex systems for managing accounts, processing payments, and ensuring compliance with financial regulations. These are significant hurdles for any company wanting to offer financial services. BaaS providers effectively rent out access to these core banking capabilities. They do this through application programming interfaces, or APIs. This model is revolutionary because it separates the creation of financial products from their distribution. Section 5. How BaaS works. A simple look at APIs. Making it happen. Now let's get a bit more specific about how banking as a service actually works. The magic ingredient, as mentioned, is the application programming interface, or API. An API is essentially a set of rules and protocols that allows different software applications to communicate with each other. In the context of BaaS, the licensed bank or the BaaS provider exposes its banking functionalities, like creating accounts, checking balances, initiating payments, or issuing cards. through secure APIs. These are the digital doorways to the bank's core systems. A non-bank business, let's say an e-commerce platform, wants to offer its customers a branded store card. Instead of building a bank, it partners with a BaaS provider. The e-commerce platform's developers then use the BaaS provider's APIs to integrate these banking features into their own app. Section 6. The big win advantages for businesses and everyday users. The rise of embedded finance, powered by BaaS, creates a powerful win-win situation. Both businesses that integrate these financial services and their end users stand to gain significantly. For businesses, especially non-financial companies, embedding finance opens up entirely new avenues for growth and customer engagement. It allows them to create stickier platforms, increase customer lifetime value, and differentiate themselves from competitors. It's about offering more value in one place. One major advantage for businesses is the creation of new revenue streams. When a company offers a financial product, like a loan or insurance, it typically earns a share of the revenue generated from that product. This could be a percentage of the interest on a loan or a commission on an insurance policy. Section 7. Show me the money new revenues and sweet user perks. Let's delve deeper into the financial incentives because money talks. For businesses, embedding financial services is not just a fancy tech upgrade, it's a solid business strategy. Consider a large online marketplace. By embedding payment processing, it can charge a small fee on every transaction. This might seem tiny per transaction, but with millions of transactions, it adds up to a significant revenue stream. If this marketplace also offers financing to its sellers, such as working capital loans, it earns interest on these loans, further boosting its income. Take the buy now, pay later (BNPL) phenomenon as a quantifiable example. When an e-commerce site offers BNPL through an embedded finance provider, it often sees an increase in sales. Section 8. Peering into tomorrow: what fintech experts see for embedded finance. The journey of embedded finance is far from over. In fact, we are just scratching the surface. Fintech experts and visionaries predict an even more pervasive and integrated future for financial services. The consensus is that banking will become increasingly invisible, woven so seamlessly into our daily activities that we barely consciously register it. The focus will continue to shift from financial institutions as destinations to financial capabilities as utilities, available on demand wherever decisions are made. This is the essence of Bank 4.0 and beyond. Experts foresee a future where hyper-personalization takes center stage. Imagine your smart fridge not only telling you you're out of milk, but also automatically ordering it from your preferred store using your pre-approved budget, with the payment happening invisibly. Or your car automatically paying for parking, tolls, or even in-car entertainment subscriptions. Section 9. The future is now: embracing innovation while championing privacy. As we stand on the cusp of this deeply integrated financial future, it's clear that embedded finance and banking as a service are not just fleeting trends. They represent a fundamental reshaping of how we interact with money and financial services. The convenience, personalization, and efficiency gains are undeniable. Businesses can unlock new value, and users can enjoy smoother, more intuitive experiences. The journey has been remarkable, moving banking from physical branches to our desktops, then to our mobile phones, and now directly into the apps and services we use every day. The key takeaway is that finance is becoming a contextual, almost invisible layer within our digital lives. This shift is powered by robust technological underpinnings like APIs and a collaborative ecosystem between traditional financial institutions and innovative tech companies. The bank is no longer a monolithic entity you visit, but a set of capabilities you access. Smash the like button and subscribe to our channel for more videos like this. Have a good day.